Hello, hello, hello. Gold up to 1250 today. If you want to hear something interesting about gold, consider this. We've had over $100 rally from the lows back on the day when the Fed raised rates back on December 14th. We hit 1120 and now we're at 1250. So we had a 130-point move, and the net long position of speculators in the gold market only increased by 24,000 contracts. That's it. It went from 57,000 net long at the bottom to 81, 82,000, so 25,000 contracts net long, and we had a $130 move. Now, consider the fact that in July of last year, July 2016, when we were at 1380 or 1390, gold had a net long position by speculators of 297,000 contracts. So we are still less than a third away, and we had a $130 move higher on basically 25,000 net longs, 25,000 net buying. Okay, that's amazing when you think about that. It shows you the potential. If there's another 210 or 220,000 contracts still to be bought to get up to the same position size as speculators had at the last market top last July. I mean, do the math on that. If we went 130 points on 25,000 contracts, now you can't just make a correlation like, then you're saying 8 times as many. It's not going to go up 800 points. And I'm not saying that. But to get to 1,400, I mean, I don't see that as any problem whatsoever. And the gold rally, in contrast to the stock rally, which is very, very unhealthy, this constant up every single day, it builds excesses. The gold rally, this kind of back and forth, nobody really believes in it. You could tell by the very, sort of reluctance of speculators to get in there. Very small increase in long open interest. That's the kind of rally you should love. That's the kind of rally that is like the low-hanging fruit. You can get in there pretty much at any level, and it is a healthy, good, strong rally that climbs the wall of worry, or in the case of gold, the wall of skepticism. Okay, whereas the stock rally, it's just going straight up. It's a lot right now. What you see happening in stocks is a lot like what we saw happening with the .com. At the end of the whole .com phenomenon back in the late 90s, early 2000, and then it blew out. And it's interesting too that they're saying that this is the biggest rally in the stock market since 1987. If you were around back then, which I was, you know what happened in 1987. We had the stock market crash. The Dow was down 22% in one day. I lived it. I experienced it. Okay, and I tell a bunch of stories. In my Forex course, there's a whole thing where I tell a big story about what happened to me at that time. All right. So just wanted to bring some perspective. Now, here's another thing. In January, I was up 20% on my Forex trading in January. All right. That's very often a typical month for me. I was up 20%. Booked profits. In February, the 20% had dwindled down to only up 6%. So I had basically lost back 14% on paper. I had positions on. All right. And surely many of you, not maybe those of you who have been with me for a while, but those of you who have followed all the wisdom of trading out there, you would have taken stops, losses, and you would have been losing, and you would be down, not on paper, down to only a 6% gain, but you would have wiped it all out. I closed out my Forex positions today, a bunch of Forex positions. I'm up 30%. So I added another 10% this month. But this is what I'm talking about. 30% in 2 months. I mean, and by the way, that is using a very, very small commitment. I only use now no more than 7.5% of my available capital on trades. All right. So it's not like you have to really super leverage up. And by the way, that's on a 20-to-1 leverage in Forex, which is very, very modest. All right. It's not, I've seen some of these places that offer like 300-to-1. That's ridiculous. I tell everybody now who takes my course 20-to-1, that's maximum. So there you have it. I mean, if you know what you're doing, if you have the right information, if you have the right mental game, and the market didn't shake me out. At no time was I concerned about that. So I was up 20%. I added another 10% this month, and that's how it goes. That's how it goes. That's how the results should be once you have the mental game, once you know how to manage your positions, once you understand, the MMT and work with the correct information. That's how it goes. That's how it goes. All right. Bye.